Hello guys, welcome back to the channel here, Uselink or Casper. Today we're going to be looking at Twitter, 5 days worth of charts. I think these are very good, especially the one at the end of the video. I find very interesting. So without any further ado, my voice is a little bit of a rusty today. I hope that's okay for you guys. But yeah, let's see where we are in this crazy world. First off, we have Blake here. Dollar potential head and shoulders forming. This is, the 4 hourly, so a semi-long, short, semi-short, I guess, topping pattern here. Again, the right pit is a bit slanted to the downside, so that is up for debate. But anyways, we could be topping out here for the dollar, and I agree on that. And getting below 105.7, 5.5, give or take, that should mark the deal for the high for this move up, anyways, for the dollar. Sahara here, SPX to CRB ratio, bear pennant in play. There it is. Beautiful, very well structured. Will target my arrowed object while it's containing within the downtrend channel. So he points to that this one will resume to the downside, meaning SPX to underperform or, commodities to outperform the SPX over the next few months here. I've heard, or I read that Sahara is getting off Twitter. I'm very sad to hear that. Again, if that is wrong, Sahara, if you see this anyways, please correct me. But still, I think he's going to leave Twitter for some time. So that's a shame. Grady with Palladium, one in most probably basing at the yellow line here. Roughly at that 100, 1000, 1150, excuse me. I think we are at 1100 right now, but anyways. Um, and plus we're in this blue falling wedge, which I also have shown you guys many times on the channel, and I still think we are getting close to a bottom here. Again, it has to prove itself. But again, uh, I wouldn't be short here, after such a major dump where we went from like almost 4K down to 1K now. If you're short here, again, that's very late in the move, and I guess you're a bit late into the move here. Sahara, XLE, oil, energy, unless it can negate all the red patterns, it likely continues to fill out the black channel. And you can see here again, rising wedges coming up here. So this is a bearish view on on XLE. At least that's how I read it again. He has this rising wedge here. It's very steep, so a pullback is probably in the making again. I'm not calling for a massive move down, but again, these very steep rising channels, trend lines, wedges, whatever it is, they tend to break and then consolidate, and then we will see. We will see what happens for the good old XLE. Sahara again. Oil, I expect you noticed, but that action on the underside of the bear wedge I just showed you has the form of a bear pennant. I showed this one as well on the channel, and this points to 74, which is the major retest of the big breakout. So this could very much be in play here for oil. And as I also mentioned here when we did the recaps, this could very well be that we're going down to 74, 75 for a big retest on oil. And that's also a big drop coming from almost 100 down to 75. That's a massive drop here. Very clean chart, by the way. I like this. I really do. I really do. Hedgehog trader here, Canadian Ventures Exchange CDNX, one of the most economical sensitive charts. Washed out and turning higher lows, bullish, constructive. What you can see here is the MACD crossing over the long term crossing over. Excuse me, the short term crossing the long term, and it seems like we're trying to put in some sort of bottom here for the CDNX, which is what we want to see really for miners and so on, commodities. Blackbeard, Uncle Warren not looking too good here. This is Berkshire Hathaway, again below a major pivot here, major pivot low, and now we're bear flagging just below that trend line, which is now resistance. And typically, if you have these flagging, if you have a breakout and you flag down, very bullish. Here we have a breakdown, and we are flagging up towards that trend line, which is now resistance. very bearish view on the Berkshire Hathaway for now. It has to prove itself to get back above that pivot low over here. That's for sure. Grady, silver is sitting right below that huge blue breakout. I agree, this is the big one here. $26 is the level to look for. 25 could be, a precursor for the breakout at 26. But again, 26 will definitely seal the deal. Anyways, it has now the red circle, huge bullish reversal at big support. Mid-month, though, still, but this is looking very, very good. And this should break out to the upside as well. And I do agree. Silver is poised for breakout when and not if, in my view. Will this be the time? Maybe, maybe. But I have a lot higher targets for silver as well. And I completely agree here that when we take out this blue trend line here and get above 26 on a good weekly basis, it goes very fast. Silver does for like 95% of the time, 98% of the time, basically it does nothing. And then the last 5%, boom, it does all the entire move. So that's what silver is doing. Got miners, this is the BPGDM. So gold miners bullish percentage index. That was a very tough word to say, to be honest. Again, just as bearish as it gets. All the indicators he has here, bearish, bearish at the bottom of each indicator. RSI at the bottom here, coming off the oversold condition. Maybe, maybe the miners are ready. I mean, gold definitely did have a fantastic week last week. So yeah, we might be in for something big here. Maybe. Master Wu here, major breakdown of Tesla. A long time wedge of Tesla has just broken down. Here it is, the green support, which is now we are below. If it cannot get back within an hour, then the earnings after market close may not be good. And if I remember correctly, we had a huge gap down, like 7%, at the earnings the day after this one here. So Tesla is breaking down big time as we speak. And yeah, this was an early warning here for Tesla that, maybe the earnings that got released, a few hours later wasn't so good. Again, I haven't read the earnings, but great chart by Master Woohoo. Elliott Wave Trader here. This is the COMEX. Due to the manner of which silver futures reacted at the top of resistance, I would assume that the probabilities for a yellow count has now increased. Therefore, we would need to break out over today's highs to make it a significantly lower likelihood. So he's pointing to that if this is the fourth wave, that we need to have a five wave all the way down to $18, give or take. Again, I don't remember exactly what happened here. This is on October 18th, so it's only one day of trading. Okay. Again, this is a more bearish take in the shorter term for our beloved silver. And again, I'm not that good at elite wave counts, so I would assume that he knows what he's talking about. That's why I follow him, anyways. So yeah, $18, man, that would suck. Sahara again. Many charts by Sahara here. I don't mind, to be honest. Gold GLD exceeded the proposed neckline. We hit the neckline here at roughly 18. This is 108 and 80, and he's pointing to a pullback all the way down here. And yeah, maybe we are getting to that point where we have the pullback. This is a massive move up from the lows, as you can see here, from 160 to roughly 180. That's a massive, massive move. And yeah, I do think that we need a rest here before we go higher. Again, nothing goes in a straight line. So I am mentally prepared for that scenario. Transpired here, the TNX, the 10-year Treasury yield has just touched, 4.9. It's the highest level since June of 2007. 5% coming in hot, and we have actually hit 5%. So we are at the highest right now, back to the global financial crisis on rates. Meanwhile, the beloved debt situation is way higher compared to then. So the system is getting very unstable. And just look at this move here by the 10-year rates. That's just absolutely insane, really. Yeah, massive move again. the fact that the stock market hasn't, crashed yet, it's impressive, I will say. Simon Cloud here. Bitcoin strong level, as I've said before. They showed their hand when they spiked it on fake news. This was the fake news by I think some sort of ETF, BlackRock ETF. Yeah, it was all the way down here coming back, and then he pointing to much lower prices. What has happened meanwhile is that we're actually above this high again. We are roughly at 30K. So let's see. Again, this could be a major topping pattern in the making, a major head and shoulders. Um, so yeah, it definitely showing some strength here, but again, if we ever close below that green neckline, excuse me, that blue neckline here, man, that is not the best view for Bitcoin. But let's see what happens. I think this week will be very important for Bitcoin. The happy Hawaiian. This is the Fed trying to break the treasury market. Since the dollar peak last year, rates have risen another 74 basis points, but the dollar has fallen 4 points at that time. Higher rates are no longer leading indicator for the dollar, and you can see here rates going up, dollar is not going up while rates are going up. So we have the divergence between the rates and the dollar has definitely disconnected here for this period of time. Anyways, let's see if they get back on track. Maybe, maybe not. Trend spider again, Tesla. Can Tesla stop the bleeding at this important pivot, the 200 moving average right here? This was the gap down that we spoke about. You have the trend line here, and then boom, big collapse. And yeah, the zone here, just north of two. Let's call it 110, 210 to 220. Definitely needs to hold for for the good old Tesla here. Major gap here again, so I think this will get filled, and then we will maybe roll over. I don't think we go down in a straight line here. But that is just my take on it. Big zone here of support, and if we can actually gain some momentum, maybe the 200-day will hold. But this is definitely not looking good. Also considering this trend line going up here and the massive breakdown. But I do expect, a bounce up here, and then we will see. We will see what happens. JC here. Friendly reminder to all the people on Finex who have hated gold all year. It's up 9% to date. And if you're looking at a 5-year chart with the monthly candles, that candle right there is absolutely fantastic. And yeah, again, my take is that when and if we get to the fourth time at roughly $2,075 per ounce, we are going to break through that level. The fourth time is often the charm when it comes to charting. But man, that candle here, the monthly candle. I know we have 10, what is it like? 8 days left of trading, I think, but still, that's a massive green candle. Hopefully it sticks until the end here for this month. My good man Kevin here from North Star. Globally, gold has broken out of its 3-year consolidation. So this is gold measured in world currency units. So a mixed bag of all the currencies. Look at that beautiful, beautiful, beautiful monthly candle. At the top of the trend line here, and yeah, this is stunningly. This points to gold in all currencies is going to rise now, and we will have that fourth touch for the dollar at the all-time high, and then we have fresh air above, no resistance from a price action anyway. Yeah, gold. Bar chart here, Citigroup closed at its lowest price in more than 3.5 years. Citigroup, major bank, looking sketchy. It could be better for the banks. Again, if you look at the XLF and the ETFs also very nervously, very close to breakdown or breaking down already. The banking sector, as long as the rates are rising, they are hurting because they are holding, um, um, assets that are just keeps going down in value when the rates go up. So and we're talking many, many billions here. Gap roadmap for this count invalidation at 1810. That's the low there. Cup and handle are in play. So he's pointing to 2.6K, which makes sense for the cup and handle. Again, I think when we break the all-time high, I think this move will end at roughly 3K. But again, yes, I agree. We could stop at 2.6K, pulling back, and then we hit the 3K dollar level. So I forgot to add this one here, major cup and handle. There it is, pointing to, yeah, you can see here above 3K. So makes total sense. Last but not least, a chart from case for silver, uranium spot price divided by the Nasdaq. Look at this beautiful change in momentum. Long-term downtrend channel right here, broken out, and now have what? We have a massive inverted head and shoulders right here, pointing to at least, the highs up here, when and if it gets taken out. But that momentum right there, very strong, very bullish for uranium spot price against the Nasdaq. Beautifully, we want to outperform the tech sector. Um, Stunning chart. One trend line here actually says it all. So as I also mentioned here, and yeah, sometimes you just keep it simple and look at it here, breakout. Oops, I gotta be in uranium compared to the Nasdaq, really. Stunningly, beautifully, I'm excited for uranium for the next 2 to 3 years, maybe even longer, depending on how fast we move. That's all, guys, what I had for today. Have a great one, and as always, like, subscribe, comment, all that good stuff, and we will see you in the next one, guys. Cheers.